And joining me now is Lwazi Matakane from Nedbank Private Wealth to give us his take on the market's activity. Lwazi, thanks so much for your time this afternoon. So Trump really stealing headlines this week, and aside from that trade truce, he was also in the Middle East striking major deals. We saw the arms deal being struck. We also saw partnerships between some Eastern countries and Nvidia, and that really boosting some of those chip makers on the Nasdaq. Just your take on how markets have been performing this week.
Yeah, thanks, Noling, and good afternoon to your viewers. So we've had recent look. If you look at U.S. markets, they've been doing quite well. 4 days of positive trading. It could be a fifth consecutive day of just good trading on U.S. stocks. Globally, I mean, it's been choppy trade. We know we're trading at all-time highs, so
Yeah.
there's base effects here. We're at a high base. Looking at the local market. But really, what's driving the headlines, obviously, is President Trump and what he's doing. And actually, we're starting to see the headlines around the actual deals being concretized. So I think markets were looking for a normalization in the operating environment, and we're starting to see some form of normalization. Although 90 days reprieve is not really a normalized situation, because what happens after the 90 days? I think, and the feeling is that after 90 days, these tariffs won't really change much. We are anchoring at lower tariffs, considering what the market and market participants think. And that will then obviously allay most of these transmission mechanisms around how the tariffs will affect growth and inflation, and obviously the response from central banks.
And you talk about resilience here at home. The local unit also really holding up well. We saw it hit a 2-month high yesterday, and it's still trading at those levels at 18.04 to the dollar. Many are pointing to hopes of a change in the inflation target, Lwazi. This after Deputy Finman David Masondo said Treasury and the SARB will be making an announcement on the inflation framework soon. So good for the currency, but not so good for consumers. Governor Kganyago has been pushing for the target to be lowered, right?
Yeah. So look, I mean, looking at our peers and our trading partners, we really the 3 to 6% band is a bit too wide. And obviously, remember, there's interest rate differentials, inflation differentials that affect the currency. So if our currency, if we've got such a wide inflation differential vis-a-vis our trading partners, obviously that impacts our local unit negatively. So I think having a target that's lower obviously will affect the local unit, because we do import a lot of capital goods and everything else. If that inflation differential is decreased, you'll have the local unit trading stronger. You'll have real interest rates for investors that are looking inwardly towards South Africa, looking a bit healthier. And obviously portfolio flows then become a resultant effect of that better operating environment, lower inflationary environment. And I think it's a good thing. It's been coming for a while. The Reserve Bank governor has been touting changing the 3 to 6% band for quite some time now. And I think it's a positive development that we do have lower inflation. So in the long run, it will be beneficial, but there will be short-term pain with respect to the repo rates and policy rates remaining high for a bit of time until inflation expectations anchor lower.
Definitely pressure on households as we tackle these high interest rates. Yes, we've seen interest rates come down, but not enough to support households here at home. Now, we also have Budget 3.0. Is this still something that's on traders' radar? The third one coming up next week?
Yeah, so look, I mean, we have to at some point have a budget for the country. So capital projects and all these spending that are required for socio-economic activities in South Africa to take place. So I think the main thing is we are in uncharted territory with respect to the political landscape that's within South Africa right now, having an ally of partners in governance. And we are seeing parties butt heads, but that's refining the process of policy formation, which is a good thing. So we do need, we actually needed a party that's going to curb, call it wasteful expenditure or fruitless expenditure within the government space, and you can find savings from there. They've been touted by market commentaries all over the place, even the parties themselves. So hopefully they get this one over the line, and we have a budget to actually stave off any negative perception towards how the country is being run, because that could be negative if we can't pass a budget on 3 attempts.
Let's move over to some company news. Cartier owner Richemont out with numbers. Jewelry sales, rather, what's really giving it a boost. And they've been, you know, one of the more resilient luxury counters, right?
Yeah, and I remember last time we spoke about it, they'd done an acquisition which bolstered their jewelry division. I think if we drill down on the results, look, Richemont is a good play within the luxury space. That jewelry masons segment is actually doing quite well. It's up 11%. I mean, we're seeing market-leading performances within certain regions, so such as the US. I think fourth quarter sales within the US were up like 16%. In Europe, 13% or so. And we spoke about Asia being a place where jewelry itself is used as a store of value. So in places like Japan, fourth quarter sales were up about 22%. Where we did see a slowdown in the Asia Pacific region was China and those Southeast Asian countries. But again, China is a different story because that economy is not really doing as well as it should be. So the sentiment towards consumer spending or discretionary spending is not as risk on as it would be. We know that population is quite risk averse and is quite conservative. So yeah, they're probably waiting to see an uptick in the operating environment in China before they start spending. But really, looking at Richemont, it's a stock that we like, the stock that we hold for client portfolios. And yeah, it's doing much better than peers in certain regions and in certain respects. And the jewelry masonry division is doing quite well for them.
And as I understand, Richemont is actually your stock pick, so you are liking that counter, and that's where we'll leave it with you, Lwazi. That was Lwazi Matakane from Nedbank Private Wealth.